Welcome. Today we're going to quickly take a look at the current USDA rural housing loan guarantee and annual fee for 2023. We're going to look at a few examples and again go through this pretty quick. Home buyers that have questions, of course, just reach out to us by calling or visit us 7 days a week at usdamortgagesource.com. Okay, first we're going to talk about the USDA's one-time guarantee fee. There's two different fees that come with USDA mortgages, and this is pretty similar to most other government loan programs like an FHA or a VA-backed loan program. They all have really the upfront fee. Uh, they may be called slightly different names. VA refers to their upfront one-time fee as a funding fee. FHA, mortgage insurance, or MIP fee, mortgage insurance premium. USDA, of course, calls the one-time fee a guarantee fee. And again, this is a one-time fee that is paid by the homeowner that is generally rolled into their loan and added to their loan balance. It can be paid separately by the home buyer as well. But the one-time fee is currently 1% of the loan amount. So that's easy to figure out. If a home buyer has a purchase of a home for $200,000, the fee is going to be $2,000. Therefore, their final adjusted loan is going to be $202,000. And again, this fee is paid really with all USDA 502 guaranteed loans, and it's really there to help keep the program really subsidy neutral for the taxpayers. That way, the program sustains itself and covers any losses through generally foreclosures and things of that nature. Okay, so next we're going to talk about the USDA's annual fee, which is a fee that is divided by 12 months and added to the borrower's monthly payment. Okay, now the annual fee, this can be a little bit confusing for many home buyers. Basically, this would be a form of, let's say, mortgage insurance or PMI, private mortgage insurance. Most people know that term. So again, USDA just calls it their annual fee, and the current rate on that is 0.35%, and again, that's divided out on a monthly basis. And that fee is paid through the life of the loan. However, home buyers, once they pay down their mortgage to 80% loan to value or less, they can, of course, refinance. USDA, FHA, VA, all these government-backed home loans, there is no prepayment or early payoff penalty. So you can just pay off your loan and then refinance maybe into a conventional conforming type mortgage, just a standard conventional loan. That is an option for home buyers again, assuming they qualify for that. But here's a quick example. Again, just a home buyer that's purchasing that has a loan amount of $200,000, and then this is the formula where basically we're going to multiply that by the current fee rate, and then we come up with $700 a year. Okay, and then we'll divide that by 12, and then the $58.33 per month is what's going to be tacked on to their monthly payment. Okay, so it'll be their principal and interest along with their escrows for their taxes and homeowners insurance, and then plus that $58.33 for the annual fee, which again, most people just know that as mortgage insurance. So that is going to be tacked on to that. But again, the one thing we want to note too is that when you compare the USDA, the mortgage insurance charge to, let's say, an FHA mortgage, which would be the program that is most closely aligned. It's important for home buyers that may be looking at an FHA loan, or maybe they're already pre-approved for an FHA loan. If they meet the eligibility requirements for USDA, they may want to take a closer look to the USDA loan, just because that mortgage insurance or annual fee, it is half the price as an FHA loan. So there's a pretty good savings there compared to FHA and their mortgage insurance charge. But something to keep in mind. Again, if you meet the eligibility factors with the USDA, meaning the two key things, of course, is going to be the property location. It has to be in a USDA approved area, a rural defined area. But don't let that word rural fool you, because many suburban locations surrounding major cities can still be eligible for the program. But again, as long as the property is located in one of those approved areas, and the household income is within the limits for your county, again, USDA is something that you should take a look at. Again, if you're not familiar with the program and maybe you just were pre-approved for an FHA mortgage, again, take a look at USDA. Just for that monthly mortgage insurance savings. And of course, USDA is also 100% financing too. The FHA loan will require a small 3.5% down payment. But again, just something to keep in mind for home buyers that really aren't familiar with this program, because it is not as popular as an FHA loan. But of course, there are a few limitations as far as the eligibility and where the property is located, and then of course the household income. You can read more on the website about all that. Home buyers that have questions, of course, just reach out to us by calling the phone number or visit the website. We're here to help. Thank you.